Now for some analysis, we cross over to Nompumelelo Siziba, who is in Sandton. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, we're here at the Sandton Convention Centre for LeaderX, the gathering where entrepreneurs, budding entrepreneurs meet with established entrepreneurs and business leaders who've made it already. But of course, we're focusing on the markets, and I've got Lee Riley with me from IG South Africa to give us today's analysis. Thanks very much for joining us, Lee. So markets seem to be on the up today relative to yesterday when they were in the doldrums following the shenanigans of North Korea. What has changed?
Well, the US has come back from the Labor Day holiday yesterday, so we're probably going to be playing a little bit of catch-up. And it just seems a little bit of complacency from equity markets, really, given the gravity of the situation that we've seen in North Korea. So, like we saw last week, bit of a rest for the commodity market and a rebound in equity. So most of them are looking to turn to the upside for the afternoon.
So by what you say, do you think that it's going to be quite volatile going forward, because we don't really know what's going to happen with North Korea? They are threatening to launch yet another missile.
Absolutely. I think the concern is that this is really a scenario where you don't know what the outcome is going to be. So fairly binary in its sense. So you've got to play your cards right in terms of your risk management and your cash management, and just make sure that you don't have too much exposure in a scenario where we're really not sure how it's going to play out, in particular over the weekends.
Now, we've had good news for a change. The South African economy grew by 2.5%, with sectors like agriculture growing by 33% on a quarter-on-quarter basis. This is good news. It means we're out of technical recession, but is it really good news, really? And what impact did it have on the rand?
Very little on the rand to start with. We saw maybe a 2 to 3 cent move. So I would imagine that maybe the more sort of macro global play is coming to the fore here. Great news for agriculture, rebounding from a fairly low base with regards to coming out of the drought. And how this has a real knock-on effect to consumers is prices of raw goods coming down, which is fantastic. Obviously, bearing in mind we've got a petrol hike tonight, which is not great for the man on the street, but in the medium to longer term, definitely better for the man on the street.
But now you mentioned that increase in fuel later on today. So what implications does that have for the SAB? Because everyone's getting excited that the SAB might be able to cut interest rates further. But if there's significant increases in fuel, what does that mean for them in their decision making this month?
Well, the SAB's mandate specifically is to do with inflation. And if inflation remains stable, given the hikes that we've seen, the rand continues to hold at these levels, and we do see some kind of improvement in GDP, then we should expect, I would expect them to hold on their interest rate cuts. I was wrong last time, along with, I think, a large majority of the analysts. So it'll be a big surprise if they cut again. But obviously they want to try and invigorate or stimulate buying in equity markets. And despite the fact that this is outside of their mandate, it might be a way of doing it.
And then let's take a look at a company. We see AfriSam trying to take over or buy up PPC for 9.2 billion rand. That's 5.75 rand a share. But some PPC board members saying that that's a bit too low. What are your thoughts about that deal, if it possibly happens, and what the benefits would be?
Well, I think the important thing to note is the third player, which is the Canadian company who's getting involved, who's had a fair amount of dealings in Africa, and in particular South Africa already, and quite successfully delisted AFGRI previously. It's a 60-odd% premium to what the price is at the moment, so you might find that given the terms that need to happen before that, they might be a bit silly to turn their nose up at it. Do they really have a choice? I'd be interested to see if there's some other plan in place if the AfriSam deal doesn't go through. Also, it's the largest and the second largest cement providers in South Africa, so I wonder how much influence the Competition Tribunal is going to have in this. And it's contingent, as I say, to a couple of requisites being fulfilled, of which a recapitalization of 4 billion rand for AfriSam. So positive in the short term. The share had a nice reaction today, so we've seen a bit of upside, but I don't know if I'd be holding my breath just yet.
And then Steinhoff, yesterday they made an announcement that their African listing that's going to take place, STAR, around the 20th of September, they're giving away, or at least they're going to sell about 23% of that to private individuals, people that they've invited. Just explain to us about this process and whether you would invest in STAR and why.
So to my understanding, it's a private placement, which will more than likely be with institutional investors. And essentially what will happen is that Steinhoff will still retain 75% of the ownership of Star, to which end a cash or cash equivalent will be paid for 25% to Steinhoff. Now, the big question for the investors in Steinhoff is whether that is then reinvested into the company, is employed as some kind of working capital, or whether it is returned as a special dividend. It's not clear, and we've only really got 2 weeks until this is supposed to be happening. So, you know, on an arbitrage basis, you might choose to sell the Steinhoff shares and buy up the Star shares when they decide to list, if you think that there's going to be significant value unlocked that way. Alternatively, if you do hold on to Steinhoff, you still will own 75% in Star. So until we get some kind of clarity on how this is going to play out and what it means, I would still be holding Steinhoff in the long term.
Thank you very much for your insights, as always, Lee. Well, that was Lee Riley from IG South Africa giving us his take on what's happening with markets today.